Hello, everybody. Another video. I'm gonna. This will be the last one for the weekend. I think I keep noticing other similar sites do maybe 5 posts a week, as opposed to what we do, which is around literally 30 or more. So I'm overdoing it, I think, but get used to it. So I'm here to please. So I wanted to walk through some ETFs here and talk about important developments over the past week. And you're going to see a lot of similarities among these charts because a lot of very similar events have happened from a chart perspective among them. And as discouraging as the past couple of days of the week, Thursday and especially Friday, were, there's still some important developments that may retain. We shall see. And let's talk about those. And we'll start off with the diamonds here. Here's the entire history of the diamonds, of course, going back all the way to the late 90s and back to more normal times than we live in now. And most recently, of course, we had the pre-COVID top, the COVID plunge, which lasted really just a couple of 3 weeks, and the falsified lift since then. Now, the two big events that took place, and I'm seeing this in chart after chart after chart, is one, wedge break. That is this wedge here, a failure of the March 23rd trend line for the first time ever. That is no small deal. And the other thing, which isn't so much an event but a circumstance, is this price gap that took place between Monday and Tuesday. That price gap, I think, is worth watching. If Darling Jerry pushes prices above that, then we have our 8 billionth fake out in a row over the past dozen years. But that price gap is definitely worth keeping an eye on. Monday marked the lifetime high in the universe for all equities, and we had a little slippage, but that seemed to terminate on Wednesday. And JP reversed things largely over Thursday and Friday. But the fact remains, we did break the wedge, and the gap is in place. So watch that gap, folks. EFA, jumping overseas here, same deal. Gap failure, price gap. MDY, the mid caps, same deal. This one, the wedge isn't really showing because I need to use my cool auto trendline feature to augment that. Oh, I love slope charts. How can you not use it? Come on. If you're not using slope charts, you are letting yourself and your family down. So there we have that. And here we have a very beautiful failure of the trend line, and we stayed below it. And that varies in some places. I mean, those Fed bucks pushed it above the trend line in some cases, and others, like the mid caps, it is still cleanly below that failed trend line. So that you get a nice, pretty view of that wedge, and the price is beneath now. OEF, the S&P 100 ETF, we have again a break, and this seemed remarkably close. Let's see what the exact price is, just out of curiosity. The low here was 1894. The high here was 1893.6. 4 pennies. Oof. Here's the spider. Same deal. We've got a price gap and a trend failure. And as with the OEF, got dreadfully close to pushing through that price gap, but did not do so. See kind of a theme here? I mean, these are all different components, vastly different stock participants in these different indexes, these different funds, and yet, magically, the charts all look the same. Here's XLI. You can see Thursday, Friday undoing all the damage that took place on Tuesday and Wednesday. But the trend line's broken and the price gap is still there. XLY. Same deal. Well below the price gap. And one last example, and a little bit of a different example. This is retail, which of course has been the surprising hero post-COVID, gone up almost 300% because people don't have enough, sanitary napkins and kitty litter, I suppose, so if they've all been buying stuff. But here's retail, and we've got a price gap on this one, And interestingly, things have, this was the GameStop zaniness back here, but things have sort of died down. Incredibly, we were higher back on Jan 28th than we are now because of that GameStop zaniness, but it seems to me we've really stalled out at those levels. A couple of other charts, a little bit of a different flavor. Here's emerging markets, EEM. We broke the uptrend on this eons ago, and we got tantalizingly close to a breakdown here, pushed back up, and we're tantalizing again. So 51.52, and I might as well set an alert there. Create chart alert, a little example here. Latest price crosses below, then, it just occurs to me, I'll do email instead of SMS because I don't want to share my phone number with the world. Thank you very much. And we'll just say EM breakdown, exclamation, excitement. And so we'll just save that alert to let me know. And one last one, of course, my favorite, the one I watch most nervously, IWM, the small caps. We have here major reversal, and what I pray to, dear Jesus in heaven, is another major reversal. And this top, incidentally, you can see is gargantuan compared to these little 2-inchers. So we've got this one right here, quite large, and hasn't broken down. The key is right there, where I've already got a chart alert set, 206.83. I will not shut up if we cross below that, and I'm sure you're all looking forward to that, but that's what to watch. Thursday and Friday were an obnoxious turnaround on this, yet we still have a clean series of lower lows and lower highs on this. So this has been a battle. This has been the battle right here. You can see right here the forces of evil, fakery, Fed bucks, all along here trying to pull things up higher and failing to do so. The forces of good and justice and the truth, me, pulling things down here. So it's a tug of war, back and forth, back and forth, back and forth. Who's going to win? I don't know. But I'll report whatever transpires. But of course, I'm rooting for the good guys. Surprise. So that's it for the video. Good luck this week, and may the gods smile upon earth sign creatures everywhere. Bye.